Tune in as James Cruz brings you Managed Money. Listen to James offer up his insights on investor behaviour, wealth management and strategies on how to retire right.
Hi and welcome to episode 9 of Managed Money. James Cruz here from Evolution Financial Planning. Welcome to this week's episode. Today we're going to have a quick discussion, obviously one way because it's all my thoughts, which is around market downturns, not if, but when. So the latest reviews that I'm conducting with clients, part of our annual progress is to look at the progress or the rate of performance. It's a small component of what we do because there's so many other things to worry about other than performance. But a lot of people are still interested, obviously, in their performance of their underlying funds. When we're reviewing those performance with clients for the last 12 months, certainly equities in regards to Australian international shares and certainly listed property assets have performed quite well. We're looking at low double-digit returns. They're doing quite well, and to be honest, it's been happening for a couple of years. I guess the common theme that I'm explaining to clients is that these constant double-digit returns generally are unsustainable. And other than the period between September 2018 to December 2018, which was a 3-month period where share prices actually fell just under 20%. So it was pretty close to a technical correction. But by the time we all came back from Christmas holidays, everything had come back. And it's pretty well powered on past those previous levels. And there's some clients are really, they're happy when asset prices are going up. What I'm telling clients is that there's nothing wrong, certainly for those retiree clients where they're in pension phase and we don't have to worry about capital gains tax. We're certainly looking to rebalance at this stage just to top up cash levels, certainly to bring it back to at least a 25% cash holding. Worst investment in the world. Rates have just gone down further. The rate of return in cash is less than inflation. But the whole point of cash is to act as a buffer against those growth assets with the ability to continually buy even when prices go down. So I just want you to think about your own situation. I know with our clients, we're spending a lot of time rebalancing and topping up those cash levels. I believe, and I'm not a forecaster, I'm not a prognosticator of where market's going to be, but I think that if you've had some good growth in your assets over the last couple of years and you haven't had it rebalanced or reviewed, it's an integral component of our investment process and philosophy. You may want to grab a second opinion and just have either your own financial planner who should be doing it, or if you want a second opinion, we're certainly available, whether it's through a Zoom online meeting, if you're not in our area, or if you'd like to drop into the office to make a time. We've got a link in the podcast where you can make a time to catch up with us. Because my view is that share prices and growth assets, not as a forecast, but as just the normal temporary decline in a permanent uptrend. We haven't had a temporary decline for an extended period for quite some time. And I'm talking about, the last 7 to 10 years post the GFC. So I just want you to have a think about that. It's just a short episode today, allowing you to think about where your assets are, to not be complacent, and to ensure that someone is at least reviewing where you're at to ensure that you've got suitable diversification and significant cash to allow you to ride through any market downturns. So I want to thank you all for listening. We're on all the platforms now, the major platforms for podcasts. I really appreciate the support. Feel free to leave a message on anchor.fm. If you could leave a review on Apple iTunes, that always helps us out in regards to growing our our listeners. And I really just want to wish you all the best for this week. And I look forward to catching up with you all soon. Cheers and have a great week.